Hey guys, Crypto Sunday, and it's a slightly green week, about 1.7% up for the portfolio. So it's, to be fair, underperforming the S&P and the Nasdaq, even on the crypto side. And this has largely been on Bitcoin and a little bit of Ethereum. The altcoins sort of not doing well at all, although they had a reasonable sort of couple of weeks. But yeah, let's have a look at the coin shares report. We sort of knew this was going to be positive, and we should have another positive one tomorrow. So 3.4 billion of total inflows. Um, Rather nice. Looking at Bitcoin, 3.188 for Bitcoin, 183 million for Ethereum. That's pretty good. A little bit into tiny bit into the multi-asset. Outflows out of Solana, 5.7 million, but 31.6 into XRP. Continues to get fairly strong inflows. But also 20.7 million into SUI products. So not one that we see very often. It's only got 400 million of assets under management. So yeah, rather surprising to see that one in there. And then sort of flat, nothing except a little bit into short Bitcoin and some other coins. By country, some sort of fairly small numbers from Australia, Brazil, and Canada, Hong Kong, and Sweden. The only sort of countries with any notable numbers, Germany and Switzerland, and then some other countries. So looking at the recent numbers, it's been a little bit weaker than last week, but still sort of green overall. You've seen sort of fairly large outflows from Fidelity, Bitwise, and Arc for sort of Monday to Thursday, especially Arc on Thursday. They were the only outflow. People not particularly happy over at Arc. And then BlackRock sort of holding up their side of the bargain, really keeping things green on all but Wednesday, from the looks of it. So yeah, you've had sort of a good couple of billion go into BlackRock, and outflows out of the rest. Continued sort of outflows from Grayscale, the old Grayscale. No surprise there, even though 16 million inflow on Thursday. But yeah, a bit interesting that. BlackRock sort of beating the rest. So similar story on Ethereum. 5 days of largely inflows, fairly small numbers, but still green, except Wednesday, which was slightly red just due to a little bit of Grayscale selling. You had zero on BlackRock and a little bit into Fidelity, but yeah, some sort of inflows scattered around here and there between BlackRock and Fidelity. Not too much else going on. Wonder whether this Grayscale is literally just somebody selling old Grayscale into new Grayscale, assuming they are allowed to, and happy to take sort of capital gains tax. But yeah, sure we'll carry on seeing more of that as time goes on. Had the weekly Microstrategy buy. Back to weekly, it seems. We're not getting many. Microstrategy holds this amount of Bitcoin and hasn't bought any weeks, which they were sort of tweeting a little bit not so long ago. They have acquired 15,335 this week for $1.2 billion. So yeah, continued buying at 92,737. So again, it's higher than that buy, same as last week. People will start saying they're reasonably good buys rather than him sort of constantly buying the top. That has pushed the average price up into the 68,500 almost. But they now hold 553,555. I do wonder whether he sort of, does these numbers on purpose. But yeah, the big news that everyone was noting is that as part of their earnings, they have announced another 21 billion at the market offering, basically. at the market common stock offering. So this isn't the sort of somewhat more risky, I suppose, convertible debt offerings, which, if Bitcoin price doesn't really go anywhere or sort of potentially goes down, then they would owe that debt and likely have to sell the Bitcoin that they bought with it. This is literally just selling stock and buying Bitcoin with the proceeds. So shareholders get diluted, which presumably they're quite happy to, because they keep reporting these, Bitcoin yield statistics and that sort of thing. If you're holding MicroStrategy, that is the game basically, and you're happy with it, and then there's sort of no risk to that of them having to sell their Bitcoin. So announcing another 21 billion of that without sort of any payback risk or having to sell, I suppose is quite bullish. Whether it's bullish for MicroStrategy is another issue, but probably is bullish for Bitcoin, unless you sort of see this as a risk of just one person or one company holding too much, which some people certainly do. I would only see it as a risk, if they have to sell some, which, the more and more sort of at the market debt that at the market issuance that they do, rather than sort of convertible debt, or as I keep saying, these dividend paying ones, I'd be happier with. So they did make a $4.2 billion loss, a paper loss. It's not really a proper net income loss, because Bitcoin went down in Q1. So $16.49 loss. I'm sure people will be comparing that to whatever it is, $400 current price. $16 loss isn't particularly good. Posting a 5.4 billion write down on its Bitcoin. So yeah, sure some creative accounting has limited that to 4.2 billion, because the underlying business essentially doesn't do anything. As I say, turning to the software business, revenue fell 3.6% to 111 million. So 4.2 billion loss, obviously, isn't affected whatsoever by the current business. Subscription revenue came in at 37 million compared to 23 million in the year prior, but overall revenue has dropped, and I do think people focus on sort of revenue, being able to pay the small amounts of interest that they have on some of their debt. Is probably worth remembering they have costs as well. As far as I was aware, they were barely making a profit at all before they started buying Bitcoin. So this 111 million doesn't just go to paying interest on the debt when they need to. That is sort of potentially spending 120 million, 130 million to generate 110. But there you go. The underlying business sort of means very, very little these days. Saw a couple of people post this as well. A US Senator and ex-Bridgewater CEO, Dave McCormack, has invested some more money in the Bitwise Bitcoin ETF, which is sort of made more interesting as he's sort of part of the legislative effort to regulate the digital assets industry. The sort of new bills that they're looking to put through, market structure bills and stablecoin bills and things. So some people sort of wondering whether we're getting a bit of a Nancy Pelosi type, investment when they know basically something is going to go through and could potentially push the price up. Legally, they have to disclose sort of these wide ranges. So he's invested between 310,000 and 700,000 more in the Bitwise ETF. I think it's notable that he's gone for Bitwise being the sort of most crypto native ETF. It's not the lowest fee as far as I'm aware, so that was interesting. And he already had up to 450,000 in it anyway in February. So he's bought, potentially up to $1 million. There is one other representative, Marjorie Taylor Greene, invested a much smaller amount in BlackRock's IBIT. So, yeah, not quite the heavy, Nancy Pelosi type Nvidia calls just before they're announcing the Chips Act, which was, yeah, supposedly legal, but you have to question it. So, yeah, small numbers, but thought it was quite interesting. Certainly keeping an eye on Trueflation as well, sort of just a nice more real-time indicator, if you like, of inflation, and sort of differs to the BLS official numbers. US sitting at 1.45% at the moment, where the official headline CPI is 2.4%. So this is sort of still kicking around, for all of April in the mid 1%. So that's pretty good. Spiked up to 1.7 for a little bit, and yeah, has pretty much been there since beginning of March. So 2 months at sort of 1% below the headline rate. Hopefully this starts to sort of feed into actual numbers, and they'll be a little more confident to do those rate cuts. So we'll have to see. The UK is sort of almost exactly the same as the official numbers, at sort of 2.2%. US the official numbers are sort of 2.4, so less of a divergence on the UK. But good to see the US has been largely coming down for most of this year, so that's good. And I do still like keeping an eye on some of these charts to sort of give you an idea of various things in crypto, really. They give you the global funding rate, so you can sort of see sometimes on these big moves upwards, February sort of 2024, February to March time, we had quite a big run up, and the funding rates increased quite a lot, so you can sort of tell that's people borrowing essentially to buy on leverage, which isn't always the most sustainable rise. Basically, you can sort of see, after this little period of heavy buying, funding rates came down, and we sort of then had that long 6 months of gains stagnation really to slightly downwards. Whereas sort of this recent move, if we just sort of zoom in here. You can tell is barely doing anything. We've actually got negative funding rates, so this is potentially people on leverage sort of selling or dropping their leverage, which is sort of positive. I guess that means the buying is largely ETFs and Microstrategy and Microstrategy competitors, just basically buying spot 1x Bitcoin, which is rather good. You don't want to see sort of things being fueled by, people 10x, 100x leverage buying Bitcoin, basically. This was an interesting one as well. Bitcoin price plotted against the Google Trends searches for just Bitcoin. There's sort of an argument that people don't really need to Google just the word Bitcoin these days. They might be searching for something else. They might be searching how to buy it, and they already know kind of what it is. But yeah, you've had sort of previous spikes in Google Trends, sort of close to the all-time highs. It's worth remembering whenever this, whatever time scale you have on this chart is, the top will always be 100. So if you looked at just that time period, then this peak here would be 100. And if we look at more recent times, the last year, say, that would be 100, where it's only sort of 40 now. So it's a self-adjusting model and it just makes 100, or it makes the highest point in that period 100, and then everything else is sort of a percentage of that, if you like. So still the all-time high on Google Trends was the 2017 high, but sort of looking at more recent, looking at the past couple of years, we had a very large spike in November, sort of just after the election, spikes on Bitcoin, which was a little bit surprising considering sort of August we had the Bitcoin Nashville conference and Trump making his sort of surprise speech there, and we didn't really get all that much. We got a huge spike in just after the election, which did accompany a little bit of a price jump, but certainly since then Google Trends has come right down to 29, sort of pretty much lows for sort of certainly the last year and a half. It was slightly lower back in sort of late 23, but yeah, it's risen to close to 100,000, sort of $96,000 on very very low Google Trends. So again, you'd sort of think this is ETFs, Microstrategy, institutional buying, potentially sovereign wealth funds and countries, rather than sort of general public Googling Bitcoin. And again, you got to expect if it sort of passes through all-time highs again, then you start getting retail buying, which is always unfortunate. You'd rather they were sort of buying in the at least a little bit of a lower price and getting some of that gain. And then a couple of charts that I think are pretty much confirming diminishing returns on these cycles, sort of comparing 2015 to 2018, 2018 to 2022, and the current cycle in white here, obviously part way through a sort of 4-year cycle. You can see they've sort of scaled up the previous cycles so that if the white line were to get a similar percentage return to previous cycles, it would be at a rather large price. The 2018 to 2022 cycle effectively would put today's price at $278,000 already, because this was around the the May highs of sort of $64,000. Only got slightly higher in the November 2021 all-time highs. May was pretty much the top basically. So yeah, the sort of all-time high last cycle translated into this cycle would be sort of 327,000, which I don't really expect anyone expects us to get to. So you can see my sort of cursor here. If we get to like 180, 200,000, what most people are expecting, it's going to push the white line to around this level sometime towards the end of the year. So it's much lower than last cycle. And if you look at the sort of 2017 run, it's obviously going to be nowhere near that. The 2017 cycle translated into today's price would put us sort of, admittedly, the same, around 250,000 today, but would sort of push to a high of 1.5 million, 1.8 million dollars at the peak in 6 months. So yeah, there's very little chance of that, and I think we have to sort of accept that percentage-wise, we're getting diminishing returns. You can look slightly different at price from the halving, and you basically get the same thing. They have added the 2012 to 2016 cycle in here. That makes it even more stark. You can see that sort of absolutely ratcheted up. That would put today's 2012 to 2016 cycle translated into today's prices would be a $6 million high. So you're not getting anywhere near those sort of percentage gains. You can, take that cycle off and just compare it to the last two since the halving. We're tracking lower than both previous cycles, and the gains are sort of basically similar since the halving. And again, if we're expecting to get to sort of potentially 200,000 this cycle, it's going to be where my white cursor is here. So again, sort of diminishing returns from previous cycles. So assuming that happens again, we have to sort of expect a little bit less than before. And the global liquidity indicator that I've been watching sort of isn't really doing a huge amount. The last sort of couple of weeks, it's been slightly down from the peak, a little bit up and down. Zooming out, obviously it's been very up sort of all of this year. Basically bottomed on New Year's Day pretty much, and is still way above the October highs, just sort of before the election. But it would be nice to sort of see a little bit more of a move up. Still sort of Real Vision and people like that are saying that this is, price is lagging these rises, and the sort of drop that we had was from this October to Christmas drop in liquidity. We've now got a large gain in liquidity, and they think this will translate into gains going forward because it lags. We've seen obviously quite a bit of a gain since the April lows. Don't think you could say this was, linked to sort of this bottoming, liquidity bottoming around here. We obviously had tariffs and Liberation Day and all of that wasn't really being predicted in back in January. But yeah, could be coincidence, could be something that just helped it along its way, even though there were other reasons. But yeah, we were up sort of 20,000 or so, just over 20,000 from the bottom, and liquidity is up. So yeah, could be coincidence, could be something that has helped it along. And as I say, coins for the week, it's been largely Bitcoin. Bitcoin's up 2%, so not exactly a huge move. Solana is pretty much flat. Ethereum down 2%. Ethereum up 2%, so it's basically in line with Bitcoin. Chainlink down 2.8%. Helium down 11%. Jito down 10.3%. Radium down 8.7%. Metaplex down 3.7%. And Honey again had a nice run last week, but is down 23.6%. So very volatile and fairly poor performing at the moment. But yeah, we'll have to see how things go. Solana sort of ecosystem struggling a little bit. But we'll have a look. Yeah, so I'm down 1,000 since I started the video. But there you go. Leave your thoughts in comments below, and like and subscribe. See you soon.